Hi, this is Mark with ValueCharts.com. This is an example of what I would consider to be an awesome buy signal. On a 120-minute chart, I actually took this signal and I'm actually making money on it now. So I'm up about $2,500 or so as we speak. And really what I was looking at here on a 120-minute continuous contract chart of gold is I saw this morning gold sell off to new lows. I've been actually trying to bottom fish this market for a little bit of time here, and it looks to me like I finally might have caught the low here, but time will tell. I feel good about the position that I've got right now, and I think that that this market could conceivably be looking at higher prices and maybe substantially higher prices from where we are. But here's my reasoning. Here's what I'm looking at right now, and here's why I made this trade. Let me go ahead and get a trend or a line tool out here, and notice that with this line tool we're seeing a decreasing strength here in the MQ momentum indicator, the histogram. Okay, that's really what I'm focusing on here. So we had our initial plunge that was back on the 28th of November, where the market sold off very aggressively here. We actually called that. We on a daily video we said look out for the trend line break. There was a nice, beautiful, well-defined trend line here. Once it broke it, gold sold off very aggressively here. Fell about maybe $30 an ounce, looks like, in relatively short order. And those are beautiful trades. So that sold off, very strong selling strength at the bottom there. And then we had a correction, and then we had another sell-off. And now notice on the MQ momentum histogram down here that we have a higher histogram value. So the selling pressure wasn't quite what it was previously. And then here again we had another sell-off here, a really incrementally a little choppy sell-off, and we have even a higher, slightly higher average histogram value here. And then we have our final sell-off here where the market was not even able to reach significantly undervalued prices. And we can tell that because the bar never turned red. The red bar segments on the bottom side are indicative of significantly undervalued prices. Now keep in mind, just because a market is undervalued or overvalued does not necessarily give us permission to buy or sell it. Okay, so just because we see undervalued prices, certainly we saw it here, and the market continued to drop very aggressively. We always have to look at value in the context of what's going on. Now I have other analysis I've been looking at, but essentially here, with this dipping down on a 200 or 120-minute basis into moderately undervalued, and then at the same time receiving our weakest reading here in the last several days on the MQ momentum histogram, that gave me permission to buy the breakout back out of moderately undervalued. So I actually entered this market right around the 1690 10 level, I believe, or 1690, I think that's 50 or thereabouts. Let me go ahead and pull up the actual chart with the trade, and we'll take a look at my actual entry price. Okay, I've got the actual chart up here. My fill price here was at 1690.70, so I apologize, I got that wrong. But essentially, when I was breaking out of the moderately undervalued into fair value, that's my trigger. That's where I wanted to go ahead and buy this market. I now have a break-even stop. So right now I've got now $2,600 made in profits in a very short period of time. I had some other compelling reasons for taking this trade that even supported the fact that this trade, this gold was due to bounce here. But combining that with this beautiful pattern we're seeing on the value bars, the 120-minute gold value bars, that leads to a very low risk trade. And essentially, I think the most I was ever down on this trade was a couple $100. And this could be a trade that very easily could end up being up. If I left the 5 contracts on, I could end up, potentially being up, $10,000, $20,000 on a trade where I risked a few $100. And that's really what we're after as traders. So that's it for this video. Great trade. This is very easy pickings. You can see previously I was also bottom fishing over here, and I ended up getting out at break even here, and then I ended up getting out here, I guess, with a small profit. But the market did end up going up. I called for, by the way, a rally yesterday. We did see about a $10 an ounce to $15 an ounce rally off the lows of yesterday, but we once again see a final swoop down to clear out all the stops, and then we see a continuation today. So I like the position I'm in. I may take part of my position off once we get a little higher here, or I may choose to keep part or all of it on for a longer term play here. But either way, I'm in the driver's seat. I have a zero risk trade right now with a break-even stop, and I'm up about $2,500 in a matter of minutes. So these are my types of my favorite kinds of trades, and looking forward to sharing more of these as I go forward here with the leveraging the power of value bars and value charts along with momentum. That's all I have for this video. Thanks for watching.